Hey guys, Tony Mello Properties team. Hope you're all doing well. I'm going to create this short video, hopefully short video, for a specific set of clients that we're working on putting together a deal. So recently, with this whole coronavirus thing and people not being able to pay their mortgage because they're unemployed and they have to stay home and all that stuff, some things have changed with FHA. And it's time to come to light. I'm not a lender, I'm not a mortgage broker, so it's not my direct field, but because I'm a real estate agent, realtor, I do have exposure to it, and that's what's happening today, is that we're discussing situations with this particular couple and the offer that they want to put in on this property. So the bottom basic line is, and I'm not going to go into great detail of what I've been talking to lenders about this specific topic and what I've been researching online with other people saying the same thing or trying to explain it in their own way, is this. Because, and I apologize for the raining, I'm kind of outside of a open house here waiting for this to start and just doing this because I'm waiting for the rain to stop. Because people are being allowed to defer their mortgage payment for a couple months, 2-3 months, something like that. FHA, VA, Fannie Mae, Freddie Mac, all those government type loan companies, products are changing some few things that is simple, but it's a major thing that's happening. The credit score that they used to be looking for to qualify someone to be able to buy a home has changed. They're going up. So if credit scores go up to make you qualified to buy a home, what they're doing is, if you have that lower credit score that was previously perfectly fine, they're asking you to pay points. What points is a percentage of the purchase price. So 1 point is 1%, 2 points 2%, 3 points 4 points, 5 points. You're basically paying them a fee to hold the same type of program that they previously had, because you've got a lower credit score, the previously qualifying credit score that now doesn't qualify. So I was doing some research online, looking at YouTube and some other people talking, lenders. I heard the number 580, credit score of 580. That's low. They can still do that apparently, but they're going to be looking for not only points, but also more money down. So when people usually think of FHA, you're thinking 3.5% down, which is lower than some other ones that are out there. So if you get a credit score of 580, and again, don't take this for absolute gospel, talk to your lender, talk to our lenders, talk to somebody that is specifically in that business and does this stuff day in, day out. I am the real estate agent, not a lender, so I'm more or less, I'm tied to it. I'm affected by it, but it's not something that is my side of the plate. My side of the plate is showing you the homes, managing the transaction, making sure the paperwork is correct, that everybody's doing what they're supposed to be doing. But again, lending without the lenders, we can't buy houses, so we're stuck with, unless you got cash, stuck with dealing with these changes and the implications of these changes. So for example, I'm going to use these people as an example. I think their credit score is somewhere like 640 or something like that. The previous FHA regime, the way of thinking or program guidelines was 640. So we wouldn't have no problem at this point. You didn't have to pay any extra points, no extra fees, no nothing. So you got 640. You can put 3.5% down, and this is more or less, and things would just go and happen. Things have changed. 640 is not good enough now. Now they want 650, 660, 680. And until you hit that, I think 680 is the number now. Until you hit that 680, you have to pay these points. 1%, 2%, 3%, 5% of the purchase price as a fee to be able to keep that 3.5% down. So from what I'm getting and understanding from all this stuff is that if you have the lower credit scores, they can still do it. You're going to have to pay either a combination of fees, points, percentage points, or more down payment. So it complicates things. And it's all kind of new, happening over the last month, 2 months, 3 months, with this whole coronavirus thing and people not paying their mortgages. And again, I understand that they're not paying because they're on unemployment and they just don't have the money and that kind of stuff. But it's reverberating through the industry, and it's becoming an issue. So now I'm kind of stuck with trying to explain to these people and these buyers that it's going to cost them a little bit more money than what they were anticipating. And to be totally honest with you, even the lender doesn't really know exactly what that is going to look like until we start to get into it. So how do you explain that to a buyer? Here's the deal, but it could be something quite could be a little bit different than what we're talking about. And not to mention, how do you start an offer not knowing exactly, all right, you're going to pay a point, 2 points, 3 points, or you're going to pay an extra $1,000, $3,000, $4,000. So I'll be going over the details of that. I'm going to do some more research, talk to a few more lenders, try to get an idea of what the deal is specifically with these particular clients. And it's going to be something that we're going to have to focus and refocus on as time goes on here, so that when we do get to an offer stage and we should be signing offers and exchanging checks and making deals happen, that we're not having to kind of refigure out what it is that we're doing, so that we can make sure that by the time that you get to a point where you're putting down money and going to a closing and everything else, it is what you think that you're going to be getting. So I got people showing up for this open house. I'm going to take off and go do that. But for now, hopefully that explains or kind of introduced a little bit of what I'm going to be doing. I'll do more videos as I kind of self-educate myself on what it is that's going on and how do we prepare to do all this stuff. All right. Tony Mello Properties team, 508-369-9755. 508-369-9755. Hope you're having a good day. See ya.